Zambia's central bank, the Bank of Zambia, has announced that it has raised the minimum statutory reserve ratio by 2.5%, a move that will further withdraw the money from circulation. Justifying the action, the Apex Bank stated that they need to address the increased volatility in the exchange rate and safeguard the stability of the foreign exchange market far outweighs the adverse risks that this action may have on the economy. Deputy Governor of Operations in the bank, Francis Chipimo, said the change in the statutory reserve requirements has been necessitated by increased volatility in the exchange rates, which intensified in December 2022 and has persisted in 2023. Now, this morning from Lusaka, Zambia, I'm being joined by Chishala Kateka, who is an economist and independent director at various companies. Thank you so much, Chishala, for joining us.
Thank you for having me.
Now, as we see it, Zambia is struggling and trying to grapple with the issue of increased volatility and, of course, with the exchange rate and instability with the foreign exchange market. Now, how did it get to this point? How dire is the situation and how is it affecting the country's economy?
Actually, I'm glad you asked that question, because for us to understand where the country is at, we need to go, of course, to what got us into this mess in the first place. I think you are aware that we borrowed a lot of money before, by the previous government. We changed government in 2021 to this new government, the New Dawn government. Now, what the New Dawn government did as soon as they took office is they took a number of measures, which some of them were political, and some of them may have actually helped to bring us to this dire situation that we're in. One of the first things that they did was that they said they were not going to pay suppliers to government. And you know that government is always the biggest off-taker of services and goods. So they said, well, because obviously for people to have been supplying to government, they must be part of the previous government, the PF. So they have had this narrative that the previous government was involved in a lot of corruption, and therefore these suppliers needed to be audited before they could pay them. Now, the effect of that is obviously meant that a lot of money was withheld from people that should have received them because that decision to withhold payments, as far as we are aware, has not been lifted. So a lot of money has been tied up rather than going into the economy. So that was the first thing that caused a shortage of money in the economy. So this current move by Bank of Zambia to increase the statutory reserve ratio has further exacerbated this problem, because they've increased that ratio by 2.5%. So where banks would have held, say, 10 billion kwacha, they are now going to be holding 12.5 billion kwacha with the Reserve Bank. And that has further reduced the money that is in circulation. And once the money in circulation is less, it means that the cost of that capital becomes very, very high and has some serious ramifications upon the economy. Firstly, it's always been difficult for particularly Zambians to get loans from commercial banks because of the high cost of the interest rates. But with this, the interest rates go further up, and the banks will now choose to rather lend to the central bank through treasury bills and bonds rather than to individuals, because the risk is increased for giving out these loans to small businesses.
Well, the Apex Bank has not shied away from the fact that there are economic risks with the decision it has taken. But then he's saying that this move is meant to justify what is needed, and that is to ensure stability in the market and to deal with the issue of the exchange rate. So don't you think that that actually outweighs any other economic risks associated with this?
It would if it worked. You need to, understand that our foreign exchange problem is not because we've got too much kwacha in the economy, but rather the fact that we are not producing enough to earn foreign exchange as a nation to stabilize that exchange rate. So this move may seem, in my view, it's probably a textbook approach to what should be done. What we need is a long-term solution that will ensure that our foreign exchange is stabilized. Let me explain something. Zambia actually does earn a lot of foreign exchange. We mine copper, we mine emeralds. We do export quite a lot of things. Now, what happens is when we do our mining, we sell our metal on the London Metal Exchange. And the money that is earned, which is in foreign exchange, and it's quite a lot, doesn't come back into the country. It actually stays out there. So it leaves that, the effect of that is that it's like Zambia does not earn foreign exchange, which is not the case. We earn it, but it is not brought back here by the mining houses. And unless and until we begin to bring foreign exchange back into the country, we will continue along this situation of trying to balance out this problem without the necessary backing of actually earning foreign exchange.
So does that mean that there's a need for a legislation to be passed or some sort of government directive to be given to ensure that these monies are remitted, foreign exchange are remitted into the country? Because just corroborating what you said, Deputy Governor Operations, that is Francis Chipimo, said that the weak supply in foreign exchange is a result of the failure of successive governments to negotiate with the foreign-owned mining companies to remit the proceeds into the Zambian economy. So it's not as though the Zambian government or the Zambian economic handlers do not know what to do. And it's not as though the foreign-owned miners do also do not know what to do, but they are not doing the right thing. So are you saying that there should be some sort of legal backing, because that is inadvertently affecting Zambia's economy and the exchange rates?
Absolutely. The political will needs to be there. If that is not done, then we have a problem. So yes, I didn't particularly read that article where Mr. Chipimo said what he said, but I totally agree that we do need some form of legal backing for that. We must come up with a framework, and there are ways of doing it. It's not an impossibility. It's not too difficult. I don't know what it is that we actually haven't done it. If we do not do that, we are not going to see this situation reversing. My view is that raising the reserve ratio is not the solution. In fact, after they raised the reserve ratio, they also raised the MPC rate, the interest rate, which means the interest rates went further higher and more money was taken out of the economy. So that is not the solution. If we are looking to expand our economy, these measures that the Bank of Zambia took are actually contractionary rather than expansionary in nature, and we will not gain much by it, apart from killing our own SMEs. And you know that the majority of Zambians are involved in that sector. So also the fact that The reserve ratio was raised a little while ago. It has not had the desired effect. The interest rates actually went up to 22%, and then came down, but is now going up again. So the cause of that reduction was definitely not the interventions by the central bank.
So now that we are seeing that the move that the central bank is making is not adding value, as it were, or bringing any sort of positivity to the Zambian economy, why is it that some analysts are inferring that what the Zambian bank is, or Apex Bank is trying to do, is to make inflation anchor within a single digits, as it were, in the short term? So do you also agree with that assertion also? And do you think that measure would also help in reining in inflation?
Inflation did come down, but let's look at the simple definition of inflation of too much money chasing too few goods. So the reverse of that is also correct. And in our case, what caused the inflation to go down is the fact that there is just no money in the economy. I mean, that is a fact. However, the effect of that no money in the economy, so yes, you have inflation, which is at single digit. I think it's gone slightly above that now. However, the effect of that inflation being low is not being felt across the economy. Prices are extremely high. Everything has gone up. And including the staple food, and people are not happy, I can tell you that. But you are better off dealing with these issues in another way, not at the cost of touching on what borders on the livelihoods of the people. Do you see what I mean? So there's economics. You bring the inflation down, and people are saying, what animal is this inflation? And who cares whether it's 1% or 20% if it's not affecting our daily lives?
So finally, now that we are seeing an issue whereby there will be less money in circulation and more monies will be deposited with the Zambian Central Bank, how you've mentioned how it is affecting livelihoods, but then let's talk about small and medium enterprises and other businesses who make do with this cash to transact on a day-to-day basis. How will they be able to survive and continue with operations and offering of services to their numerous clients? And on the other side, you have said that the move by the central bank is counterproductive. Are there other viable options aside the fact that there's the need to remit the foreign exchange into the Zambian economy? And probably there are other areas that you feel that the Zambian government should be looking into to plug into to solve the problem that it is faced with?
Okay, so the biggest elephant in the room for us as a nation is the debt overhang. We have some serious debt, and we were the first country in Africa to default on that. And this issue has not been resolved. Now, what the central bank has done is affecting not just the livelihoods of individuals, it's affecting the SMEs and the medium-sized enterprises. Actually, even the big companies, because without liquidity in the economy, it's very difficult to trade, simply because people don't have the money to go and purchase. There's no purchasing power. And some companies have begun to fold up. So that particular move, as I said before, was counterproductive and is not positively impacting the medium and small scale enterprises. What can the government do? I've said this a number of times, and what Dr. Chipimo mentioned, the fact that two things. So mining for me presents a very low hanging fruit. It's just there. You just need to put in place the mechanism to ensure that we get dollars into the country. Once you do that, your exchange rate will come down very quickly and it will stabilize. People are interested in a stable exchange rate because then it's easier as a business to plan. And but the way it is at the moment, it keeps going up and down. So you put in interventions, one-off interventions like the central bank pumping in money into the economy, but you can only do that for so long. And then once that effect wears off, then the exchange rate begins. So you really need to look at the supply side and ensure that you have adequate supply. So mining is one of them. Secondly, we really need our country, we really need to go more into manufacturing and also up our game in the agricultural sector.
Okay.
We have vast opportunities as a nation in terms of land, in terms of what we can do. For some reason, we failed to convert. We've got a serious market around us, the SADC region, and also just our neighbors, the Congo, as well. Yeah.
All right. Thank you so much, Chishala. Of course, we know that the issue of manufacturing and exportation has been a challenge for so many African countries, but then it's very important that the central bank looks at what is workable, looking at the peculiarities of the country, so that, just as you have said, it won't just be about theorizing around textbook experiments and coming up with decisions and results that may not be favorable to the Zambian economy. But then we say thank you for joining us on this conversation. Appreciate that.
Thanks a lot. Thanks for having me.